This is a BC Eagle accounting video. SNT 5, Construction Accounting Video Number 2 over ASC 606 Revenue Recognition. This shows how to account for a profitable contract that has an interim loss. Things to remember about construction accounting is that revenue is recognized in proportion to costs incurred compared to total estimated project costs. Second, the construction in progress account contains two items: construction costs to date plus the gross profit to date. And number three, when a customer is billed, a receivable is created, but revenue is not. A liability, deferred revenue, is created instead. For financial reporting, the balance sheet, accounts receivable is shown as a current asset, and then two other accounts, construction in progress and billings in progress, are netted to show a net current asset if construction in progress balance is bigger than the billings in progress balance, or a net current liability is shown when construction in progress is less than the billings in progress. Now, let's turn to the wolf problem that we did as an in-class exercise. Here you have the Wolf Construction Corporation, and the distinction to the presentation of the material that you have in this problem compared to ones that we have done in the past is that the information presented to you is showing you cumulative costs and cumulative billings or cumulative cash collections to date. In previous problems, you were presented with information pertaining to a particular year. So as you do the exercises, pay close attention as to whether the information that you receive is from year to year or cumulative to date. Now, what we will do with this problem is to prepare all the journal entries to create the T accounts for construction in progress, accounts receivable, and billings in progress, and then to show the income statements and balance sheets. The problem itself requested 2018 and 2019. We will do all 3 years of the construction project for 2017, 18, as well as 2019. The first thing that we should do is to just draw the 3 accounts, construction in progress, billings in progress, and accounts receivable, and recognize that the construction in progress account shows 2 things: the costs to date as well as the gross profit to date. So let's get after that. The costs in the first year were $10,000, and so you would need to increase the construction in progress account for the $10,000 and credit cash accounts payable or overhead allocated. Second thing that we need to do, we need to calculate the amount of profit that would be recognized in the first year based on the costs put in to date. So let's look at that calculation. To calculate the gross profit to date, we would compare the contract price to the total costs that we would estimate to complete the project. So far, we put $10,000 into the project, and we estimate that it will take another $17,500 to complete. So the total cost that we estimate for this project will be $27,500. That value compared to $37,000 will give a total estimated gross profit of $9,500 for the entire project. As of the current date, we are $10,000 of the $27,500 into the project, and so you have a fraction of $10,000 over $27,500, or putting this into 2 digits, 4/11ths of the project done. 4/11ths, and as you can see, that fraction was calculated by taking 10,000 and divided by 27,500. 4/11 times 9,500 gives you gross profit to date of $3,455,000 that we do put into the gross profit. So the gross profit at the end of 2017 will have a balance of $13,455. Since there was no gross profit in the prior year, since 2017 was the first year of the project, subtracting previous gross profit recognized from the total to date gross profit would allow us $3,455,000 on this project. Now, let's go to the information in 2018. Cumulative construction costs to date were $22,500. Since $10,000 were recognized in the previous year, the current year construction costs would be $22,500 minus the $10,000 that was recognized last year, or $12,500. Now, let's see what the gross profit on this contract would be. Well, we believe that we now have cumulative costs of $22,500 in the contract, and we believe that it will take another $15,000 to complete. $15,000 plus $22,500 means that the contractor believes that there will be a total of $37,500 total for the contract. $37,000 is the contract amount, so this contract will have a loss of $500. According to U.S. GAAP, the entire amount of the loss would be recognized in the year that it is discovered. So the entire $500 loss will be the balance to date in the gross profit. Now, in the previous period, $3.455 million was recognized as a gain, and so that needs to be eliminated from the construction in progress account. So the $500 loss, add to that $3.455 million of revenue gross profit recognized in the previous year, means that the current gross loss in the current year would be $3.955 million, and that is the amount that would appear in the construction in progress. So, beginning balance of $13,455,000 plus $12,500 of additional costs, less a loss of $3.955 million, will give a desired ending balance in the construction in progress of $22 million. Another way to look at that is to track the construction in progress balance. And so here you see cumulative cost to date for 2018 of $22,500 less the loss to date of $500,000 gives the desired balance of $22 million. Information in the last year, you have cumulative cost to date $35 million. The contract is done, so there's no future costs to complete. Revenue is $37 million, and so that means that the gross profit on this project would be $2 million. Now, last year, the contractor believed that there would be a $500 loss on the project. Well, we would add to the gross profit in the current year the reversal of last year's loss that we incorrectly estimated, so the current profit for the contract in 2019 would be $2.5 million. The current year's gross profit for the entire contract and the elimination of the loss recognized in the previous year. So, for the entire contract, costs incurred to date, $35 million, plus gross profit to date, $2 million, would give the balance required, $37 million, in the construction in progress account. Now, let's take a look at the income statement and the balance sheet for each of the years. The screen is reduced a little bit so that we can see the construction accounts right next to the financial statements. In the first year, the percent of revenue that we recognize will be a forced amount. based on the construction costs to date plus the gross profit to date. So the gross profit recognized in the current year, $3.455 million plus $10 million of construction expense will result in $13.455 million as income statement revenue recognized. In the second year, the amount of loss recognized was $3.955 million. That's the gross loss. Add to that loss $12,500,000 of construction expense, and that results in only $8.545 million being recognized. And in the final year, we have $2.5 million of gross profit recognized, plus the construction costs of $12,500,000. Those two together produce construction revenue of $15 million. Tracking the entire revenue for the entire contract, $13.455 million in the first year, $8.545 million in the second year, and $15 million in the third year, give total contract costs or revenue of $37 million. Adding across the construction expense, $10 million in the first year, $12.5 million in the second year, and another $12.5 million in the third year, produced $35 million total construction costs, and the difference between the revenue and the expense produces a gross profit for the entire contract of $2 million. The balance sheet will be reported like this. You have accounts receivable in the first year based on $12,400,000 of billing, less $11 million of cash collected. That would give a balance of $1.4 million. Accounts receivable balance, that is shown as a current asset. The balance in the construction in progress for the first year, $13.455 million, is compared to the credit in the billings in process, $12,400,000, and that gives a net balance, construction in progress costs in excess of billings in progress, of $1.055 million. That is shown as a net current asset. For year two, the company billed another $9.6 million and collected $10 million, and so the balance in the accounts receivable would be the beginning balance of $1.4 million plus $9.6 billed, less $10 million collected, or $1 million at the end of 2018, and that would be shown as a current asset on the balance sheet. An interesting thing happened in 2018 with construction in progress and billing in progress is that the amount of construction in progress to date, $22 million, is exactly the same as the amount billed, $22 million. So these two items offset each other, and so there would be no net construction asset or construction liability. In the final year, another $15 million was billed, $12 million was collected, and so we have beginning balance of $1 million plus 15 less 12 will produce an ending accounts receivable balance of $4 million. This is a retainage usually done by the customer in case there are any post-opening fix-ups. So the Wolf Construction Company has $4 million yet to collect. Once we add the profit and the cost and the gross profit to the construction in progress, the construction in progress account has $37 million in it, and the company has billed the entire $37 million. So these two again offset each other, so there is no net construction asset or liability. Finally, we do want to make the journal entries, and so here they are. And again, you can see the construction T accounts next to the journal entries. First entry is the necessity to record construction costs for the current year. For the first year, increased construction in progress and credit cash, accounts payable, or overhead allocated for $10 million, and that's the amount in the construction in progress account. Second item is to record the gross profit. The construction costs incurred during the first year will show up as a construction costs account on the income statement, comparable to cost of goods sold. Revenue would be credited for the $13.455 million, and construction in progress, the amount that you see as a debit to the construction in progress account, also would be debited in the journal for $3.455 million. The company billed $12.4 million, increased accounts receivable, and the deferred revenue account billings in process, and then the customers paid $11 million, increased cash, and decreased the accounts receivable. Now, you can trace the journal entries for the 2018 year and the 2019 year and compare it directly to the T accounts for the construction project. There you have it, a construction project that is ultimately profitable. It earned $2 million over its lifetime, but it was necessary to record a loss in the second year when the profitability of the construction progress was in doubt. Thank you for listening. Do well.